What's up, everybody? It's the Sky Money channel, back at it with another video. Today we're going to be talking about my first year in investing in stocks and crypto. It has been almost exactly 1 year. In that 1 year, I've been able to get my accounts to 10K. So we're just going to be talking about what I learned in my first year and my first 10K. Let's hop right into it. All right, so real quick, this is definitely not financial advice or anything like that. This is just all I've learned from my first year in investing. Number one, the first thing I've learned my year in investing is have a plan. Have a plan and decide your risk tolerance. Are you going to invest in the S&P or a safe index fund, or are you going to invest in GameStop and something risky? How much money are you willing to lose? What sector or what industry are you going to be investing in? What type of company? Why? Why are you investing in that company? When you have no plan, you're not taking a strategic approach, and you probably don't have enough structure in your investment plan, which will most likely lead you to panic selling or FOMOing, fear of missing out on a stock, and just overall making bad decisions. So definitely have a plan and stick to it unless there's other information that comes up where, of course, you can adjust it and make changes that fit what you want to do. So number two, the second thing I have learned is use logic, not your emotions. If you're having a good day, a bad day, if you see this person making a bunch of money, if you see your account down 10% in 1 day, don't make any quick decisions just based on your emotions. Think about it, take a step back, do some research, look into it, and really think, is this the right decision that I should make right now? A good investor is never gonna make trades based off purely emotion. They're gonna do it based on the facts and based on the numbers. It's really easy to panic and sell, or see someone else making a bunch of money and you wanna try to jump on the hype train. Just take a step back, think about it, does it make sense? Is it a good investment? And then go from there. Stick to your plan, basically. So number three, this is kind of my personal strategy, like I said, and things that I've learned, but one's definitely played for the long term. Even if you invested right before COVID or right before the Great Depression or any of the other of these events, in the long term, you still would have made money if you just waited it out, and you would have made a lot more money if you would have kept buying during that dip. So that's just my personal strategy, but I think as long as you're playing it long term, you will make money in the long run. Obviously, you're not going to be making crazy 100% gains in a day, but you can do a lot riskier things to make a lot more money, which I think is a good idea to have in a separate account, or have a little bit of money set aside to do riskier things. But at the end of the day, a majority part of your account or investing money should just be in long-term things that will basically go up over time and you don't really have to worry about. But it is good to have a small part of your portfolio that is a little more risky, but it's really easy to lose your money doing risky things. So just play it safe, hold out for the long term, and I guess, yeah, that's really it. So the fourth thing I have learned is mostly everything is going to be priced into the stock or crypto. This more applies to stocks, but the price is always going to be adjusted according to what news or trends are going on. People on Wall Street do this 12 hours a day. They're probably going to know this information a lot better than you. Not always, but I'll say 98% of the time.
Breaking news, Bill Gates is getting divorced. Let's just pretend that he's still the CEO because it's funny. The institutions see this. They look at their models, talk to some insiders, and consult the Asian quant making $500,000 per year. He priced in the divorce 10 months ago, before Melinda Gates even priced it into her mind. He used satellite imagery to track Melinda's recent behavior, then built a linear regression model that recognizes this behavior as multiple standard deviation irregularities for Melinda's historic movement patterns. He then consulted multiple behavioral psychologists as well as Microsoft insiders and came to the conclusion that there was turmoil in the relationship and divorce was a likely outcome. Then there's you.
It's probably going to be priced in, but that doesn't mean there's always room, always opportunities to make money. If you think an industry is going to grow in the next 5 years, then you definitely want to keep investing in that. No matter what is already priced in, there's always going to be opportunity to make money. So number five, we got don't think about it too much. Obviously, you want to stay up to date on your research and your news and everything that's going on, but don't really think about the day-to-day of what is happening with your investment as long as you truly believe it in the long term and you think it's gonna succeed. I mean, don't stress yourself out by opening up your account and looking at it every 5 minutes. There's really no point, even though I'm very guilty of doing that. I probably pull up my account every 3 minutes, but don't think about it too much. Just as long as you're sticking to your plan and thinking about the long term, what happens day to day really doesn't matter too much unless it's some extreme event. All right, so the sixth and final thing, obviously there's been a lot more than six, but just for this video, we're gonna put six, is there's cycles to every market. So what I mean by that is you will see a certain industry hot for a couple months, 2 to 3 months, and then you'll see them slow down a little bit and correct themselves. And you'll see this happen over and over again. Obviously, like I said, I've only been doing this for a year, but this is what I have seen, and I think a lot of other people would agree with this, is you'll see a certain sector, like let's say tech, with Apple, Microsoft, any other of these tech companies, you'll see them be hot for 2 to 3 months, and then you'll see them kind of correct themselves, and then they'll go back to shooting back up. And you can kind of buy the dip and play it out and try to find good buying opportunities. And you see this with a lot of different sectors. Let's say when Apple is up 1 month, then your more classic stocks like Coke might be down and it'll switch off. And you kind of see patterns to this, and you'll start to see it develop if you've been watching these stocks for long enough. Like I said, I've only been doing this for a year, so I definitely need to see these cycles happen more often. And all right, so that wraps it up for this video. My first year of investing, my first $10,000, up about 30% this year. Not bad. Obviously, I've been lucky with COVID. My first 10K, I'm really excited about that. Hopefully, going to be able to grow it exponentially. But just to recap this video real quick, we got have a plan, stick to it, use logic, not emotions. Everything is basically priced in. Then we got don't think about it too much, and there's cycles to every market. So thank you guys so much for watching. If you are still watching from this point, if you're still watching this video right now, I just said watch a lot, but definitely subscribe and like the video. I'm really trying to grow this channel and just